welcome to Equip's second virtual annual member meeting. My name is Danny Casey. I'm the chair of the Equip board. Joining me today is our Chief Executive Officer, Scott Cameron, Justine Hickey, a colleague on the board and the chair of our investment committee, along with Andrew Howard, our new Chief Investment Officer. We also have our board members tuning in, and on behalf of my fellow board members and all the staff at Equip, I'd like to thank everyone who's joined us today. I'm pleased to confirm we have a quorum of directors, as well as our auditor and actuaries. And as such, today's annual member meeting is now officially open. I'd particularly like to acknowledge the traditional owners of the land from which I'm chairing this meeting today, the Gadigal people of the Eora Nation. I pay my respects to their elders, past, present and emerging, and the First Nation elders of other communities who may be joining us today and all around Australia. It's important, and I wanted to make sure you all understand the information in this presentation today is general in nature. It's about the fund as a whole. It doesn't take into account personal circumstances, such as your individual investment or financial objectives. If you'd like individual financial advice, we do have advisors who can assist you. And we've included these numbers at the end of the presentation. I think that concludes the administrative side of things. So look, the agenda for today is as follows. I'm going to make some opening remarks on behalf of the board. I'll then ask Scott to present on behalf of the executive team. That'll be followed by Justine, who'll cover and outline some of our investment principles. Then Andrew will provide an update on the investment performance and the outlook for the fund. We'll then have some time to answer questions from you, our members. And just like our first annual member meeting, which we held in March this year, we've received a large number of questions prior to the meeting, and I think that demonstrates that our members are indeed engaged with the fund, and we certainly welcome that. You can ask questions during the meeting by using the question and answer function within Zoom, which is located in the bottom right of your screen. Now, please note at this meeting, again, we can only answer general questions about Equip. Of course, if you have specific questions about your personal account or your circumstances, then please call our team. The number will be listed at the end of the presentation. Now, we may not have time to answer every question today, but please be assured we will provide written responses to all questions, as well as the minutes of this meeting in the coming days. These documents will be made available at the Equip website. That's equipsuper.com.au/AMM by the 17th of December 2021. equipsuper.com.au/AMM. Before we get to our agenda for today, I wanted to make particular note of the performance of our fund in light of the recent APRA performance tests, which received a lot of media attention. As part of the Your Future, Your Super reforms, APRA conducted their inaugural superannuation performance test. The annual test evaluated how the default My Super products performed over the past 7 years, adjusted for fees and relative to a benchmark calculated by APRA based on a fund's asset allocation. In September, APRA released the results of that test, and pleasingly, Equip passed the performance test, as did Catholic Super. So Equip passed and Catholic Super passed. There were 13 funds that failed the test, and we know that there was some confusion as 2 other Catholic and Christian funds in the industry failed the test. But we want to reassure all our members that both our funds, Equip and Catholic Super, passed the performance test and are strong performing and healthy funds. As Scott will go into more detail on how our funds stack up against our peers in terms of returns and fees later in the meeting. I'd like to introduce you to our current board members, but first and foremost, I think it's incredibly appropriate that we acknowledge the work and dedication and the vision of my predecessor as chair, Andrew Fairley. For 12 years, Andrew was a great advocate for members' interests, a proponent of skilled, professional, representative boards, and a leader who recognised the need for change, for growth, and for partnerships. I also want to express my appreciation for Michael Clinch's contribution as he ends his successful 5-year term as an Equip board member. And it's appropriate also that I express my deep appreciation for the work of 3 long-serving Catholic Super Board members, Deb James, Peter Hazy and Carolyn Harkin, whose terms have also just ended on our board. I welcome incoming board members, Sharif Rahmani, an employer director, and Matthew Casson, a member director. During 2021 financial year, we had a board of 12, but as of the 1st of July, we've moved back to a board of 9, who you can see on the screen here. We think this is an optimal number for us in the future. We're likely to retain this number unless there's a significant joint venture or merger opportunity, which may see us expand the board again. The board is proudly skills-based, with 3 employer representatives, 3 member representatives, and 3 independent directors. As mandated, the chair is a board-appointed independent director. This mix of flexibility to attract and select high-caliber people as a minimum, this mix and allows the flexibility for us to attract and select high-caliber people, which meet as a minimum all the standards required by legislation, gives us all the skills we need to serve you better. And now turning to our fund. Who are we? Well, Equip has been helping Australians grow their super and plan for the future since 1931. From humble beginnings with the State Electricity Commission of Victoria, we've grown to become a $32 billion fund today, operating across a multitude of sectors. Now, a lot has changed since those early days, but our commitment to members' long-term financial security has always defined us as a fund. It's the bedrock that enables us to face the new century with confidence and a sense of purpose. And because we're an industry super fund, all profits go back to our members. In other words, we're super fair and square, which is why we've been rated a Platinum Plus fund for 15 consecutive years by Super Ratings. Our vision is for excellence in super, delivered with care. Our purpose is to support our members to prepare for financial freedom in retirement. Equip is here to help you reach your financial goals. Throughout all that time, our guiding values have not changed. We put members first. We do what we say we will do. We collaborate and we innovate, and we celebrate success. You know, even before joining the board in 2019, I was aware of Equip's deep heritage as one of Australia's oldest super funds. And my respect for the great standing of this fund has only grown and deepened since I've become more closely involved. I'm honoured to be here now as the chair, helping support our people and our members as we steer through the many economic, regulatory and legislative changes of today. My focus is to deliver on our core purpose, maximising retirement benefits and outcomes for members. On the 30th of June 2021, the fund undertook a successor fund transfer with the My Life, My Money Superannuation Fund, which was the technical culmination of the joint venture between the two funds. This SFT saw our funds under management combine, bringing our current funds under management to $32 billion. Next year, you can expect Equip to do more of what we've always done well. Excellent governance, striving for a strong investment performance, trustworthy financial advice, and the best possible service for all our members. We're also pleased to continue our focus on environmental sustainability as we commit to a clear roadmap to net zero carbon emissions in our portfolio by 2050. We will continue to partner with our valued employers and will continue to improve how we work with them to better the financial future of their employees. You know, Equip will always be defined by our commitment to members' long-term financial freedom. We are pleased to have delivered another year of strong performance and dedicated service to you all, and we look forward to doing so again in the year ahead. And now it gives me great pleasure to introduce to you Equip's Chief Executive Officer, Scott Cameron. Scott was appointed CEO in September 2019. He's an experienced CEO and CFO. He's worked across global corporates in financial services and advisory environments and has a strong track record of integrating and expanding highly complex environments. Please welcome Scott, and thank you, Scott, for sharing your insights with us today.
Thanks for that introduction, Danny, and hello and welcome everybody who's joined us at this year's annual member meeting. This year didn't deliver the long-for COVID normal that we'd hoped for. We continue to experience reverberations both locally and internationally from the pandemic. However, I'm pleased to say that as a trustee, we've continued to deliver support and returns to our members during this time. We have a strategy of growth with the goal to have 300,000 members and $50 billion of funds under management by 2025. Growth enables our members to enjoy the benefits of scale, which includes optimising our fee position in an industry of increasing regulatory pressure and a desire of continuously improving our member services. Our proactive approach to growth continued as planned this year. On the 1st of May 2021, a successor fund transfer saw Toyota's 5,000 members and nearly $900 million in funds under management join Equip. And we've just finalised another SFT with BOC Super. This occurred on the 1st of November and brought 3,000 members with $765 million in retirement savings to the fund. And despite the achievements of the past year, we're committed to doing more for all of our members, delivering improved experience and opportunities to engage with us, and supporting you in optimising your retirement outcome. Actions such as salary sacrificing, consolidation, and additional contributions are all activities we encourage members to consider to drive their retirement balance. As I look forward to next year and beyond, we will continue to focus on unlocking more benefits from our joint venture with Catholic Super, increasing our capability and capacity for growth, and reaching out further to employers. Most importantly, we'll continue to commit to improvement and the support and services we offer our members. We do also need to be mindful of the legislative environment. There are a number of recent changes that you may be aware of that we've been implementing. From the 1st of July this year, the super guarantee increased from 9.5% to 10%, and will rise to 12% by 2025. This will lift living standards for retired Australians and positively impact the domestic economy. And from November this year, new workforce entrants will be stapled to their first superannuation fund, and current workers stapled to their existing fund. When someone moves to a new workplace, they'll no longer be arbitrarily signed up to the new employer's favourite fund, although they're still free to make a choice of fund at any time. We're pleased our members will find it simpler to stay with Equip as they progress through their careers. Before I talk about performance, I'd like to welcome our new Chief Investment Officer, Andrew Howard. Andrew's strong leadership style and investment experience will add great value to our fund as he builds on the excellent progress and platform the investments team have already achieved. You'll hear from Andrew a little bit later in today's meeting. With low fees and strong returns, you can be confident your fund is performing over the long term. In fact, we stack up really well when you compare us to our peers. To illustrate that point, you can see on the screen that over the last 15 years to 30 June 2021 and after fees, Equip's balanced growth investment option returned $430 more per year than the retail average and $235 more per year than the all fund average. Our fees are lower than the average super fund and lower than the average industry super fund. And when I talk about fees, I also like to talk about returns, because I know that's what's important to members. It's how much money is in your account, what we call total returns. So when our fees are lower than the average fund and our returns are higher, they both contribute to more money in your account. Along with ensuring our investment returns and fees are competitive, we're always working to make sure members enjoy great service and get the right advice, including support and guidance so they can retire comfortably. You, our members, tell us you want regular, relevant and timely engagement, and we have a range of channels that we use to interact with you in your everyday lives. Many members have logged into their account online over the last 12 months, accessing information about their super, investments and insurance. Others have been kept informed through the phone, email, Facebook and LinkedIn. During the 2021 year, 23% of calls we received to the helpline participated in a survey at the end of the call, with the majority telling us they would recommend our fund to others. We achieved a net promoter score of plus 66 at 30 June 21, which is incredibly high and reflects our commitment to delivering service excellence. With member and employee safety a top priority, all face-to-face retirement planning seminars were in COVID-friendly environments. The employer engagement team continued to educate and inform our members, meeting with nearly 4,000 people in the past 12 months through both group presentations and private meetings. And the same applied to Equip Financial Planning, our financial planning arm, which provides trusted, personal financial product advice to Equip members. Over the past year, some financial planning meetings were able to be held face-to-face, but with ongoing COVID-19 restrictions, most were done online, either by phone or video. It's also important to note we paid out $100 million to approximately 7,500 members as part of the COVID-19 Superannuation Early Release Scheme, and we were really pleased to have been able to assist our members at this very difficult time. In October last year, we rolled out Smart Cover, a comprehensively redesigned insurance offering to our 40,000 members holding Equip My Future Super Cover. Smart Cover is the default for 270 of our employers, as well as our public offer product. With the redesign, the main goals were to align default cover with our guiding insurance principles, providing quality death and total and permanent disablement cover that is flexible and affordable, while not unduly reducing retirement outcomes. Based on our feedback from members, we built a cover that automatically changes according to members' life stage. The amount of death and TPD cover received at each life stage is based on research conducted with our members and in close consultation with industry experts on what a typical member may need. And while Equip My Future saw the biggest benefit design changes, we took the opportunity to review the cover we offer across all of our plans. Notably, we introduced occupational ratings in one of our largest corporate plans, catering to 25,000 members. We're very happy to report that these changes have been well received by our members. And putting members' interests and needs first will continue to be our core principle as we grow and scale, and it's great to see the hard work in action. We're proud to have helped one of our members, Mick, achieve his dream of early retirement. Mick has been an Equip member for 36 years, and at 58, he was ecstatic to be retiring at an early age. He tells us that a good paycheck alone isn't enough when it comes to your financial future. It's crucial to monitor investment options and make super contributions regularly when you can. And thanks to this knowledge and with Equip's assistance in his retirement process, Mick's been able to travel with his wife, spend time with family, and enjoy life without worrying about having enough money. And we're pleased to have a history of being acknowledged for our outstanding value within the super industry. This means greater value super for our members. Independent ratings agency Super Ratings has awarded Equip the highest platinum performance rating as a best value for money fund 15 years in a row. And finally, I'd like to thank our staff who have been incredible over the past 2 years. For much of this time, they've worked remotely, but they've continued to work for you and your retirement. So now it's time to hear from Justine Hickey. Justine is one of our independent trustee directors and is chair of the investment committee. Justine is a professional non-executive director with over 24 years experience in investments, superannuation and corporate governance. Justine chairs the board of fund manager D&R Capital. Needless to say, Justine brings an impressive level of strategic insight to the table. Welcome, Justine, to today's meeting.
Thanks, Scott, and a warm welcome to all our members who are tuning in today. At Equip, we believe in active management of members' dollars across a long-term investment horizon. The investment principles that guide the investment committee and team are to deliver the best possible retirement income for all our members, keeping fees and costs as low as possible, to focus on long-term goals, aiming for consistent outcomes through different market conditions, to make proactive investment choices based on market conditions, to retain a team of high caliber investment professionals, to access exceptional investments globally that would otherwise be unavailable for individual investors, and to strike an appropriate balance between risk and return in members' long-term interests. Now, I'd like to focus on responsible investment. We believe that environmental, social, and governance factors, or ESG, influence the overall investment returns. So by keeping these factors in mind when we invest our members' money, it will increase the overall risk-adjusted returns for our portfolio, just maximising your retirement income. Responsible investment is an important part of our long-term strategy. During the last financial year, we published our inaugural climate change position statement, stewardship statement, and responsible investment report. We partner with ACSI, the Australian Council of Superannuation Investors, to assist us with engagement, advocacy, and voting advice. We're a member of the Investor Group on Climate Change. We're signatories to the Tobacco Free Pledge. We're a member of GRESB, who assess the sustainability performance of our property and infrastructure assets. And we're a member of the Responsible Investment Association of Australasia. We actively promote strong ESG policies in our investee companies, our fund managers, and the broader investment community. We engage with companies, policymakers, and actively exercise our voting rights at meetings in support of good governance and a sustainable economy. I'd like to give you a few examples. As investors in some of the largest social media companies, we've engaged directly with them in collaboration with other institutional investors to try to drive reforms to establish appropriate company culture and practices. And this type of engagement has achieved positive results, with these companies adjusting their privacy settings for users to be simpler and easier to understand, and making it harder for third-party apps to access their users' personal information. This engagement has also led to a strengthening in controls within these companies on the dissemination of content inciting violence. Other examples of our engagement are with one of the world's largest pharmaceutical companies, encouraging the expansion of access to their medicines, and also with a major global consumer staples company, which is now committed to reducing plastic waste, including shifting a majority of its products to recyclable packaging. We've also engaged with all our investment managers on modern slavery, and we did that in 2020 and again in 2021. We're satisfied that all our managers are aware of and committed to implementing the requirements of modern slavery regulations. Now, I'd like to touch on climate change. The environment is one of our biggest challenges and requires urgent attention. We believe that climate change is a material, foreseeable financial risk, and yet it also provides investment opportunities. In December 2020, we committed to achieving the net zero emissions by 2050. We believe that an orderly transition to a low carbon economy will provide the best outcomes for our members and for broader society. But net zero is no small undertaking, and we're putting in place a roadmap to achieve this via a combination of advocacy and engagement to drive change, through reducing our exposure to high emitting industries and companies, and investing in industries where the future opportunities lie with the shift to a low carbon economy. Our current investments include offshore and onshore wind power and solar energy. We also invest in grid solutions to improve energy efficiency and battery storage technology that makes renewables more accessible. We're committed to keep doing more each year, and we'll continue to update you on our progress through our reports, which will be on our website. Now it's my pleasure to hand over to our Chief Investment Officer, Andrew Howard, who started with the fund earlier this month. Andrew has over 25 years' experience in the investment industry, and before joining Equip, was the Deputy Chief Investment Officer at Hostplus. Prior to that, Andrew was the Chief Investment Officer at Vic Super. And in his earlier career, he held roles at Mercer, Treasury Group, and Frontier. So we're delighted to have Andrew join us today to take us through Equip's investment outlook. Over to you, Andrew.
Thank you, Justine, for the warm welcome. And thank you to all of you who are attending today's annual members meeting. I'm genuinely excited to be joining Equip at this pivotal time in the fund's history. So let's get into the returns the fund achieved in the last financial year and our investment outlook going forward. I'm pleased to report that we delivered strong returns for the 2020-2021 financial year. Our Equip Balanced Growth investment option returned 16.6% for the year, which is an exceptionally strong result. We maintained our position as a top 10 best performing fund in the balance category over the long-term period of 10, 15 and 20 years. It's important to note that these figures are after investment fees and taxes. I know many of our members are interested in fees, and absolutely fees are something we aim to minimise as much as possible. But the most important figure is the net return, as it shows exactly how much your savings have gone up or down. If you have more queries specifically related to your investment choices, we offer a team of financial planners who are available to assist. So let's take a look at what has been going on in markets. It's fair to say it's been an extraordinary period in markets, but the most important question is where to from here. In many ways, it can feel like there has been a disconnect between what we have observed in equity markets, with the US market currently hovering around record highs, and the real economy, with the effects of the pandemic still being felt by many all around the world. We only need to look at the current events in Europe, with many countries moving back into lockdown as case numbers spike and the fourth wave takes hold. And of course, literally in the past few days, we have learned of a new COVID variant, which has been named Omicron, which has led to countries across the globe introducing travel bans on a large number of African countries. It is a stark reminder that we are a long way from seeing the back of COVID. And as news of the new variant broke late last week, it put investors on edge, leading to sharp falls in equity markets around the world. However, overall, equity markets have enjoyed a record run over the past 18 months. So what has been driving this? In response to the pandemic and the sharp downturn in economic growth last year, we have seen unprecedented actions by central banks, such as the RBA here in Australia and the Fed in the US, with official interest rates at record lows and fiscal government stimulus pumping billions of dollars into the economy in an attempt to kickstart the economy and ward off a prolonged recession. Arguably, these extraordinary stimulus measures have worked. Today, we are seeing a strong rebound in economic growth across the globe and unemployment rates moving back down to near pre-COVID levels. But of course, this does not come without its own new risks. And the focus today is all around the inflation outlook and how central banks react to rising inflation. Recent inflation numbers released in the US show that inflation is rising at its fastest annual rate in more than 30 years, as the index rose by 6.2% in the 12 months to the end of October. So all eyes turn to the US Federal Reserve and whether or not it will look to increase interest rates sooner rather than later. This is a key point for investors, as record low interest rates have been one of the key drivers of the strong returns delivered from equity markets. A similar theme is playing out here in Australia, with the RBA holding firm on its current view that it does not foresee the need to raise interest rates before 2024. But should inflation rise, there is a degree of uncertainty in markets as to whether the RBA may need to bring forward its timeframe in raising rates. So the jury is out as to whether the recent sharp increases in inflation data is transitory or whether it points to a more prolonged period of higher inflation, which arguably requires central banks to act sooner rather than later. With this uncertainty, we are seeing an increase in volatility in equity markets over recent times. As mentioned earlier, the record low interest rate environment has been extremely positive for investors. But if we see rate rises sooner than expected, this would not be positive for equity markets. In addition, with news breaking on this new COVID strain, investors are on edge over the potential ramifications of this new variant, as there is still a lot to learn on how infectious it is and how effective the current vaccines are in combating this new strain. So what does this mean for our investment strategy? So while there is an element of increased uncertainty creeping into investor sentiment around the inflation outlook and the policy settings of central banks, with this uncertainty only heightened by breaking news around the new COVID variant, it is critical in market environments such as this that we retain our disciplined long-term investment approach and not react to the short-term noise in markets. Justine touched on our key investment principles earlier, highlighting our focus on delivering the long-term investment goals for our members and providing consistent returns. And in a market environment where we see the potential for increased volatility, this principle is front of mind for us. One of the key tools in the investment toolkit to effectively be able to do this is diversification. We are focused on ensuring that we build a portfolio that is diversified across a wide range of asset classes, not only by asset class, but within asset class. The pie chart on the screen shows the asset allocation of the Equip MySuper default option. As you can see, it invests across a wide range of asset classes, from listed equities, both here in Australia and overseas, across developed and emerging markets, to unlisted asset classes or real assets, such as property and infrastructure. Importantly, our highly diversified investment strategy means that we are not reliant on equity markets to solely generate returns. After the record run we have seen in equity markets, not only since the rebound over the past 18 months, but over the longer term, dating back to the GFC, it would not be surprising to see equity markets pull back at some point. But if the last 18 months has taught us anything, trying to time markets can be a tricky game. And as the saying goes, it is time in markets, not timing markets, that counts. So while the outlook does look increasingly uncertain as investors grapple with the conundrum on whether inflation is here to stay and central banks burst the bubble of equity markets by increasing rates, and the impact of the new COVID variant still not known, the key message is to ensure that we do not react to short-term noise and are prepared to take advantage of opportunities as they arise during periods of heightened volatility. Now I'll hand back to Danny for Q&A. Thank you.
Thank you, Andrew. Thanks, Justine and Scott, for that, the updates you provided to our members. Look, before we jump into the Q&A, I just wanted to give a big thank you to our dedicated team who've again continued to work tirelessly throughout the pandemic. Many of our employees have worked hard to provide our members with the top quality service and support they deserve working from their own homes. So thank you for your resilience, your unwavering support to our members. And finally, a very special thanks to our members on the front line in energy, resources, water, infrastructure and manufacturing. Once again, you're at risk working through the pandemic. We appreciate your efforts. And now to the Q&A. Our first question is from Tammy. Tammy says, after the disappointing result with Christian Super and the amalgamation, why should we still say with Equipable? Tammy, thanks so much. This is an important question to address. As I mentioned earlier, it's very easy to have confusion when funds have similar names. So just to clarify, It was Catholic Super who Equip undertook a joint venture with in 2019. And I've got to make it very clear that Catholic Super did not fail the performance test. There were 13 funds listed as underperforming in APRA's first performance test. And it included a fund with a similar name, Australian Catholic Superannuation and Retirement Fund, as well as Christian Super. Now, both are unrelated funds. They do work in Catholic and Christian organisations, but they're unrelated. So neither of those funds have any connection with Equip or Catholic Super. So once again, Catholic Super passed its performance test and is performing well. But thanks so much, Tammy, for raising that. It's helpful to have a chance to make sure we clarify. Our next question is from Mick. And Mick asks, what options are being developed for low-cost index funds and ESG funds? I'm wondering whether, Justine, you might be able to respond to Mick.
Sure, thanks, Danny. Mick, in general, our investment options have low fees, and we believe in keeping costs low. But the most important thing, of course, is the return that we receive after all fees, costs and taxes, the net return. So we need to strike the right balance between fees and returns. We have also spent considerable time recently enhancing our approach to ESG. And Equip currently has an indexed SRI or socially responsible investment option. And you can find details about that on the website.
Thank you, Justine, and thanks, Mick, for your question. Sergit asked the next question. He said, where does Equip sit in the government super fund rankings? Scott, perhaps you might respond to this one, please.
Sure, Danny. Sergio, as Danny mentioned before, in respect of the Your Future, Your Super performance test, the Equip My Super option passed, which was very pleasing. We understand there'll be further changes to APRA's disclosure of the results of the test going forward, but so far APRA has only awarded funds with either a pass or a fail rating, and to reiterate, we did pass this test. The government's also released the Your Super comparison tool through the ATO, Australian Taxation Office website during this year. And that compares My Super investment options using either an individual's data through the MyGov portal, or by the users inputting their demographics into the tool. The funds can be compared using different measurements, including net performance fees and whether the fund passed or failed the APRA performance test. And the tool ranks the fund depending on demographic responses. So Equip will be ranked differently for different demographic inputs, including age and super balance, for example. I mean, there's no one rank for the fund. So hopefully that does answer your question, Sergio.
Thanks, Scott, and thanks, Sergio. It's very useful to be able to unpack some of that detail. Next question's from Emma, and Emma says, "How was Equip's investment strategy? How has it evolved during these unprecedented times?" Perhaps Justine, you might respond to Emma.
Sure. So our investment process has developed and evolved over many years and many different market cycles. And we should expect that markets will be very volatile from time to time, perhaps right now. As long-term investors, these periods actually provide opportunities for us to buy assets that might otherwise be too expensive or just not available. So our focus remains on generating net returns to meet the CPI plus targets over the relevant timeframes for each investment option. During the initial phase of the COVID downturn in early 2020, we took the opportunity to increase our allocations to shares when the market fell heavily. And we've also reduced our exposure to fixed income investments, given the very low yields and the potential for capital losses. Thanks, Emma.
Thank you, Justine, and thanks, Emma, for the question. Oh, we got another topical question here from Chris. Do you invest in cryptocurrency or do you plan to? Andrew, would you be able to respond to Chris for us, please?
Sure, Danny. Look, we don't invest in cryptocurrencies. This is an area of growing interest to some members. However, we do not consider it an appropriate investment of members' money at this point in time. The technological architecture behind cryptocurrency, that is the blockchain or distributed ledger technology, is an exciting area. There could be meaningful applications of this technology in varying ways going forward. However, when investing, we are very careful to understand the various risk and return drivers of any investments. With cryptocurrency being a relatively new phenomenon, we find it difficult to get comfort with these factors. Also, understanding its attractiveness or not in terms of valuation is extremely difficult.
Thank you, Andrew, and thanks, Chris, for your question. Next question we've got here is from Mary. How will Equip work on reducing fees for members? Scott, would you be able to respond to Mary for us, please?
No problems, Danny. Mary, the fund's been working really hard to manage our internal and external costs, and we have seen efficiencies because of the fund growing in size and scale, both in terms of membership and also our funds under management. The board and management are very conscious of ensuring we continue to manage those costs effectively to reduce any pressure on fees, and we're always looking for opportunities to pass on fee reductions to you, our members. So we will continue to be focused on costs and fees, Mary.
Absolutely. Thanks, Scott, and thanks, Mary, for raising that issue to help us respond. Next question we've got here is from Dino. Dino's asking, uranium stocks have skyrocketed in recent months. So what is Equip's exposure to this resource? Justine, would you be able to respond, please, to Dino?
Sure, Danny. So Equip employs active investment managers to help us identify the most attractive investment opportunities. And within our Australian equities portfolio, we have a number of managers that research and invest in the resources sector. Our dedicated small cap manager has some exposure to uranium. However, in the context of the overall portfolios, this is relatively small.
Thanks, Justine, and thanks, Dino, for your question. Next question we have here is from Stephen. Stephen asks, are there any plans to have an investment option consisting of precious metals, say gold, silver, copper, nickel, lithium, etc.? Andrew, would you be able to respond to Stephen, please?
Yeah, sure. Look, we do not currently have plans to offer this type of investment option. We're always keen to understand the types of product offerings members are interested in, and if there is significant amount of member interest, then we may consider it. So far, we have not found enough member interest for this type of option. However, importantly, our Australian shares option has a meaningful allocation to resource companies and the underlying commodity exposures that have been listed here by Stephen in his question. Another important point here, I think, to mention is that as trustee, we have a responsibility to make sure any investment option we make available takes into account the need for diversification. And a precious metals option may not offer enough diversification to protect members from the volatility of assets like these. Danny?
Thank you very much, Andrew. Terrific answer. And thanks, Stephen, for asking the question. Now, next question we have is from Yufen, who's asking, is it possible to get details of the investment pool, so the names of companies invested? Andrew, would you mind responding to that, please, as well?
Yeah, great question. Our website has a list of top holdings in each sector located on the investments page of our website under our investment approach, with a heading of our top investments. You can also see information about the external managers we appoint and our major holdings in the fund's annual report, which is also available on the website.
Thanks, Andrew, and thanks, Yufen. Michael has posed a question asking again about comparison with other funds. Justine, would you perhaps be able to respond to Michael for us?
Sure. I might respond to part of that, just touching on performance, and then maybe throw to you, Scott, just for some other dimensions of our comparison with other funds. Yep. So from a performance perspective, we have a long-term investment horizon, and we measure our performance over periods of 5 years plus. And that really depends on the risk profile of each option. And our options generally stack up really well against competitor peers. To the end of September, our flagship balanced growth option has delivered an average of 9.7% over the past 10 years. And that compares to the industry fund average of 9.1% per annum. Scott, would you like to add some more information?
Yeah, no problems, Justine. Michael, in addition to the investment performance that Justine just spoke to, we also offer low fees. And with low fees and strong returns, we're confident, and hopefully you're confident, that Equip is performing over the long term and that we stack up really well when compared to our peers. Yeah, our fees are lower than the average super fund, as I mentioned in the presentation, and also lower than the average industry fund. And along with ensuring our investment returns and fees are competitive, we're always making sure and working hard to make sure that you, our members, enjoy great service and also get the right advice, including support and guidance, so that you can retire comfortably. As a $32 billion fund, our size and scale is big enough to provide our members and employers with great products and services, but still small enough to care about our members and be able to support them really well to make sure that they get the best retirement outcomes possible. But thanks for the question, Michael.
Yeah, thank you, Michael, and thanks, Justine and Scott. Next question we have here is from Peter. And Peter's asking, please provide an update on the outlook for equity markets in the face of COVID recovery and the energy transition, another two very topical issues. Andrew, would you be able to respond to Peter, please?
Yeah, absolutely. And I think, Danny, increasingly topical in light of literally what we're seeing unfolding at the moment. And as markets have opened this morning, certainly lower in light of the reaction to the new COVID variant. But look, more broadly, interest rates are currently very low. And as growth rebounds from the lows experienced this year due to COVID, we should expect inflation to rise. And we certainly touched on that during the body of the presentation. Bond markets are now expecting a few rate hikes next year. However, interest rates will remain very low by historical standards. Rising interest rates will be a headwind for fixed income investments, and providing growth outcomes remain mostly positive, should see a reasonably positive environment for shares and other riskier investments. Higher than expected inflation could see volatility in share markets, and I think we're seeing that a little bit at the moment. With regards to the energy transition, it's a great question, and one that has seen a lot of press more recently on the back of the recent UN climate change conference, which was known as COP26. Recently, the fund adopted a target of net zero carbon emissions by 2050. We are currently in the process of planning and implementing actions towards that goal. We have a number of investments in the renewable space, including wind, solar, and transmission assets. Importantly, we believe that we can still generate positive returns for members and navigate a path towards net zero by 2050. In fact, we have committed over $800 million to renewable energy investments, as well as investments that have a strong focus on climate change, with investments across both developed countries such as the US and in Europe, as well as in emerging economies across Asia. We have also invested in projects here in Australia, such as our investment in a local solar fund. Danny?
Thanks, Andrew. Great question, Peter. Thanks very much for explaining that and responding, Andrew. Christopher has got our next question. What is the percentage return over 5 years on a balanced pension fund? Andrew, while you're there, you might be able to respond to Christopher as well, please.
Yeah, sure. To September 30, 2021, Equip's balanced growth pension option delivered 9.52% per annum over the last 5 years. The balanced pension option, which has a slightly lower allocation to growth assets, delivered 7.37% per annum. And important to add here that further information on performance can always be viewed on our website.
Thanks, Andrew. Thanks, Christopher. Yes, the website has very valuable information all the time on performance, as well as many other matters. Felix has got our next question. This might be for you, Scott. What is another fees question? What is the justification for a pro rata asset fee charge? Does it cost more to maintain $100,000 compared to $50,000?
Thanks, Danny. Felix, it doesn't necessarily cost us more for a member to maintain a higher account balance, but our experience and data does show that members with higher account balances are more likely to interact much more regularly with their superannuation fund, and and that does add to costs. Under the legislation that came into effect in 2019, super funds must now apply a cap on the total amount that they can charge members with low balances. It's 3% per annum for accounts below 6,000. I think it's also important to remember that we also cap the levels of the asset-based administration fees that we charge at $1,250 for the Equip My Super and Equip pension members. And that provides a further level of member equity to ensure that our higher balanced members are not charged fees that are unreasonable. But I think overall, we will continue to work really hard to find ways to reduce our administration fees. And hopefully, Felix, that answers your question.
Thanks, Scott, and thank you, Felix. Now, next question is from Elaine. Elaine's asking, what is the investment strategy for the low risk conservative option in view of the very low or to negative interest rates? Andrew, would you please respond to Elaine's question?
Yeah, sure. Thanks, Elaine. For some time, we have recognised the risk of capital loss on fixed income investments from a rise in interest rates from today's very low levels. This is particularly pertinent for options with high exposure to bonds, such as the conservative option. We have sought alternative investments that can diversify interest rate risk, but still provide protection from poor equity market returns. Also, due to active management, our fixed income investments are also less sensitive to rising interest rates than broader industries.
Thanks, Elaine, and thank you, Andrew. We're going pretty well for time. Probably got 3 or 4 more questions time-wise, I think. But let me take the next one here from Katerina. Have you committed to gender targets? And if not, why not? Katerina, I might answer this one. In short, no, we have not committed to gender targets, as we see diversity as being well beyond assuring equality and equability of gender. In fact, at Equip, we promote and embrace diversity of all kinds and at all levels of our organisation. We want all our employees to feel valued, appreciated and free to be who they are at work. Our employee lifecycle processes, well, they're designed to prevent discrimination against our people, regardless of gender identity or expression, their sexual orientation, their religion, ethnicity, age, neurodiversity, their disability status, citizenship, or any other aspect which makes them unique. So our gender diversity is such at the moment that our current board is 3 women and 6 men, and our executive team has 4 women and 5 men. But Katerina, thanks for raising it. I hope that it provides some clarification. Our next question is from Alan. Alan saying, given the looming rate increase and high inflation, what's the strategy for next year? Andrew, would you please respond to Alan's question?
Apologies, Danny, I've just lost my place here.
No problem, that's okay.
You just repeat that
Yes,
question. Okay, there we go.
Absolutely. Alan's asking, given the looming interest rate increase and high inflation, what's the strategy for next year?
Yeah, great. Thanks, Danny. Apologies for that. Look, we've talked about the fact that interest rates are currently very low, and as growth rebounds from the lows experienced this year due to COVID, we should expect inflation to rise. Bond markets are now expecting a few rate hikes next year. However, interest rates will remain very low by historical standards. Rising interest rates will be a headwind for fixed income investments, and providing growth outcomes remain mostly positive, should see a reasonably positive environment for shares and other riskier investments. Higher than expected inflation could see volatility in share markets, and I think as we've discussed, we're seeing that a little bit at the moment. But our strategy recognises these risks, and we have a lower exposure to core government bonds than what we otherwise would. This is offset by exposure to alternative assets that can provide diversification and additional sources of return.
Thanks, Andrew, and thank you, Alan. And Andrew, while you're there, we have another question which I think I'd like to pass to you. It's from Peter, asking why are the investment choices so limited?
Yeah, sure. Good question. We need to strike the right balance between offering an appropriate number of choices for members and managing the costs associated. Generally, we find that most members use only a small number of options provided. We believe the options we provide to be high quality and diverse enough for most members to tailor their investments to their desired exposures. We believe diversification is very important, and we've discussed that a little bit today. And ensuring appropriate diversification can be more difficult for very specialised standalone sectors. Our diversified options have exposures to thousands of underlying investments and many top performing investment managers.
Thanks very much, Andrew. And Peter, thanks so much for the question. Our next question is from Norman. We might have to make this, looking at the time, we might have to make this our last question. It's from Norman, and Norman's asking, I'd like to know what is the percentage of Equip's investment exposure to all derivative markets? Justine, perhaps you could respond to Norman, please.
Thanks, Danny. Yeah, Norman, actually quite a topical question because we just looked at our derivatives management policy a couple of weeks ago in the investment committee meeting. So we do have an exposure to derivatives, but it's quite a small proportion of the total portfolio. The main exposure to derivatives is via our forward foreign exchange contracts, where we hedge foreign currency exposures back to Australian dollars on overseas investments. To give you a sense, for our MySuper option, the exposure to derivatives is around 8% of assets. Many of our investment managers also have the flexibility to use derivatives, but generally these allocations are quite small.
Thank you, Justine, and thanks to everybody who submitted a question. It's nearly 12 o'clock, so it is time for me to close the meeting. But before I do that, I just want to reiterate that we as a fund are here to help Australians grow their super, to plan for the future and have the best retirement possible. And as I mentioned earlier, our vision is for excellence in super delivered with care, while our purpose is to support our members to prepare for financial freedom in retirement. You know, we aim to deliver strong long-term investment returns while keeping our fees as low as possible. We look to deliver that great member service and advice you can trust. We want to thank you for giving us the opportunity to look after your retirement savings both now and in the future. It's a privilege and an honour to serve you in this way. As I mentioned earlier, the minutes of this meeting, plus the written responses to the questions answered today, as well as any questions that we didn't have time for, will be provided in December on the Equip website. And the address is up on the screen, equipsuper.com.au. That is equipsuper.com.au. Also, if you have any questions about today's meeting or about your super, then please call our helpline during business hours on 1-800-682-626. Number one more time, 1-800-682-626. Look, to all present, that concludes our second annual members meeting. So on behalf of the Equip board and the management team, I again thank you for your time. It's a pleasure to serve such an engaged and loyal member base. I hope you have a wonderful rest of the afternoon. Thank you.